Hi everyone, my name is Darryl Panes, CEO of As Good as Gold Australia. And this evening, once again, I'm joined by my brother Brian, a partner at As Good as Gold.
Thank you, Darryl.
And this evening we interview the one, the only Alasdair Macleod, Head of Research at GoldMoney. Good evening, Alasdair.
Good evening, Alasdair.
Good evening, Darryl. Good evening, Brian.
I've got to say, Alasdair, before we ask a question or two of you, I've got to say that Brian and I are extremely excited. There's a lot of things happening over here. We're building on our product line as well, and we're going to, I think, be the first to produce a 1 kilo freedom round. So as most viewers would know, we've got a 1 ounce, we've got a half ounce, we're in silver, gold, but this is a 1 kilo. And I've always been excited when I see a kilo round, they just look spectacular. And no one in the world has got one of these, freedom round, of that weight, that prominence. So I believe we're going to be the first. We're about a month away from distribution of that particular product.
Yeah, and while I'm thinking about it, Darryl, I would even say the only opposition I think that would have for this freedom round of 1 kilo would be the US government, because they're always talking about having all coins in your pocket, you see. You know, that's the problem with fiat currency, with gold currency. Gold, you got gold, silver. They always talk about nobody wants currency in their pocket anymore. Oh, you've got this big one hanging in your pocket, but nah,
put a bit of a lean on it.
I can tell you that a 1 kilo bar is actually pretty heavy. It destroy your pockets.
I could tell you some stories about that too, but I won't, because we've got too many important questions to ask you. But I was also just going to highlight the fact that something else that excites us is that we can't tell the viewers too much about it tonight, but over the next couple of months, we'll be sharing a lot more information, but we will be holding an event in Adelaide, Australia in November next year that will be certainly the biggest of its kind in the precious metal space ever held in Australia. And I think it might very well be the biggest event that's ever been held in the world. This is going to be huge. We've got some spectacular speakers that'll be coming across, and we're going to share that information. And the whole object of the exercise is to wake people up. We haven't got a lot of time. Unfortunately, it's going to take a little bit longer than what we'd hoped to put all of this together, because we're expecting a massive audience. And it will take time to prepare all of that, but people have just got to get to understand that we're reaching a crucial stage now. And I think unless you've got your own precious metals, I think you're in trouble. And obviously our speakers will be making strong reference to that. So really looking forward to that.
Absolutely.
We got a couple of questions here, haven't we? Last time I think we got to one. Was it one with Alasdair? We had 6 prepared. So
something like that.
Yeah. So let's get started.
Absolutely. Let's go.
Okay. So Alasdair, in the last 12 months, price of gold in Japan has risen 21%. And in the last 5 years, it's risen an average 22% per year. In Argentina, the price is up 184% in 12 months and over 13 times in the last 5 years, 1,300%. In Turkey, the price has risen by 62% in the last 12 months and over 600% in the last 5 years. So even in China, gold has surged this month alone over $100 an ounce on international prices. In US dollars, however, the price of gold remains pretty stable. What I'd like you to do, if you could, explain this, what it would need to see the US dollar follow suit.
How long have you got? I think the first thing I would say is that your points about the gold price rising in really these weakening currencies, which is really what it is. It's not so much the gold price rising, it's these currencies going down against a fiat dollar. So if you're living in Japan and using the yen, I mean, basically, you're seeing the yen going down. Why is it going down? It's because the Bank of Japan has stuck interest rates in a negative level. I think it's 0.5 or 0.25 or something. I mean, this is plainly ridiculous. And the statement that came out of the Bank of Japan that they're maintaining the rate at minus, I think, 0.5%, in order to tackle inflation and to bring inflation back down to 2%. I mean, come on, what are they? Negative rates to tackle inflation. I mean, it's beyond belief. They've just completely lost the plot. And as a result, the yen looks like breaking through the 150 to the dollar level. I mean, we're looking at the moment, I think on my screen, I have it, just quickly tap it up. 149.3. This is about to break a very, very important psychological level. And to some extent, these problems have been accelerated, not just for the Japanese, but if you look at the Indian rupee, that's the same story there. You look at almost any currency against this strong dollar. I mean, a strong in inverted commas dollar. They're all sort of being destroyed. Why is the dollar strong? Well, just look at the yield on the 10-year Treasury. That's now exceeded 4.6%. It's higher than it has been in the last, 11, 12, 16 years, whatever. I mean, it's going higher and higher. Now, in the past, we've discussed this. And, I've been warning people that interest rates are going to continue to rise and bond yields are going to continue to rise. And the consequence of that, of course, which leads into the end point, if you like, that you were making, Darryl. The consequence of this is that there are going to be massive losses as bond prices fall even further, and on top of that, it starts undermining equity prices, and it's already actually happening in equity markets, but it's at a very early stage. Now, the problem is that the foreigners within the US banking system have a total of about $32 trillion of investments and bank deposits and short-term T-bills, commercial bills, and so on and so forth. Now, that is a huge, huge number. It exceeds US GDP. So what do these guys do when they see the value of their portfolio investments? I mean, the long-term investments are about 24 trillion of this. 24 trillion, so it's slightly less than US GDP. When a foreigner starts losing, on his investments in a foreign currency, it is quite simple. He just tries to get the hell out of it. So unless they liquidate their positions in these long-term portfolio assets and decide to hold cash dollars or swap it into more short-term investments, they're going to sell dollars. I mean, they must do. So under those circumstances, the dollar is poised for a complete collapse. Now, it's even worse than that, because we're only talking about the dollars and dollar investments which are within the US banking system. On top of that, you've got the Eurodollar system. And the Bank of International Settlements, a guy called Claudio Boria, produced a paper fairly recently trying to draw everybody's attention to the risks in the foreign currency markets. Now, he quantified those risks as being around about $93 trillion. $93 trillion, of which 88% has the dollar on one leg of the transaction. Now, what these are basically is on and off balance sheet obligations in dollars outside the US banking system. So you need to add that back into the mix. Those positions on a falling dollar will be liquidated as well. And let's look at the other side of it. What, if any, foreign exchange is owned by US residents? Well, the answer is only $750 billion. The ratio is some incredible level, like, for something like 180 to 1. I mean, basically, there is no foreign exchange, for all intents and purposes, there is no foreign exchange in the possession of US residents to absorb the potential selling from arising initially from a bear market and then cascading as dollars credit outside America is disposed of as well. There is virtually no foreign exchange in America to absorb it. Now, you can argue that the central banks will sort of intervene and they'll increase their swap lines and all the rest of it. Yeah, but usually when we're talking about swap lines, we're talking about quantities like, $50 billion. Maybe 50 here, 50 there, 50 there. I mean, this doesn't add up to a row of beans, given the scale of the problem. And in fact, I've released an article today, or it'll be published later on today, this being Thursday, the 27th, sort of detailing the position on this. I mean, this is something which domestic US residents are just not aware of. I mean, and this is completely consistent with currency collapses. What happens is it's the foreigners who get frightened first, and they get the hell out of it. And the residents are sitting there saying, "What the hell's going on? Why is the dollar being trashed?" Yeah. And that, I think, is going to be the situation fairly shortly. And of course, going back to your point, Darryl, about how the gold price is rising in these weak currencies and all the rest of it, you will see this phenomenon in dollars. And as this, as I said before, it's not so much gold going up, it's actually the dollar going down. Yeah. But the real danger is that when residents in America begin to realize that it's their dollar going down, not gold going up, and therefore they should dispose of their dollars quite rapidly. But I think even without that action, even before that happens, the distortions which have accumulated really over the last 50 years of fiat dollars, with all these dollars, euro dollars, and all the rest of it accumulating outside America, this, I think, is potentially a very rapid collapse. And it could happen. It could happen almost at any moment. I mean, it really could. So a bit of a frightening answer, I'm afraid, to your question. Yeah. But that, I think, is something we really ought to be aware of.
Yeah, so we're not far. We may not be far away. Yeah, Alasdair is quite.
It does. It has always. I mean, I get my news from many sources, Alasdair. Obviously, YouTube, and I go onto other channels and look at economic events. And I seem to. I'm not the smartest kid on the block, but I understand this, and I just don't understand why the American public don't understand it. I mean, are they fed propaganda to the opposite degree that they don't understand this, in the position they're in? Is it propaganda, Alasdair?
There are two things. Propaganda, one, and two, bear in mind that something like 85% or 9% of Americans don't even have a passport. As far as they're concerned, the rest of the world doesn't exist. I mean, it really doesn't.
Right.
So they are so insular that it's not surprising. And also, of course, anyone, say, in Wall Street knows that the dollar has been the king currency forever, as far as they're concerned. They cannot conceive of a world where that is not the case. So they dismiss it immediately. I mean, I've got friends in America, even sort of Austrian economists who find it quite hard to understand the geopolitical situation and how that is shifting. And how that is, tipping the dollar into a potential crisis on its own. Because they say, like Janet Yellen said when she was in China on this very question, she said, well, roughly 90% of world trade is settled in dollars. That's never going to change.
Yeah. Okay.
You can see the level of belief is so entrenched. And Americans, God bless them, I do love them. They are very insular in their outlook. And I think that probably explains, that that attitude.
Yeah, I think the problem too is that the changing of the baton doesn't happen every 5, 10, 15 years. It happens about every 100 years. You know, I mean, no one thought British pound would have lost its ascendancy either, but it did. But then we've got to wait a long time before we see the US dollar experience the same fate.
And the US blowing up their own dollar, basically.
Yes.
Yeah.
Okay.
Absolutely.
Yep. Let's move to another country, Alasdair. I know that it's one of your pet loves, I think, at the moment. We're going to be talking about Russia.
Just to intervene, Russia is not my pet love.
I probably used the wrong word there.
The topic is, yes.
But I did hear you and read about about Russia from what you were saying, that they're in a predicament that if they don't change their monetary system themselves, they're going to be in a big hole as well. So the question is Russia going to be the first to a gold standard, and will it have influence of the other BRICS nations soon after?
Yeah, I think it's very likely it will be. I mean, just to give a bit of background to this point, most people believe that the value of a currency is driven against other currencies by its trade surplus or trade deficit. And because Russia, with its energy, has a trade surplus, and because it is now driving energy prices upwards, the assumption is that that will be good for the ruble. That is not necessarily the case. The problem that the ruble has is that it is a fiat currency, just like the dollar, just like the Australian dollar, just like the pound. And it depends entirely for its value on the faith in that currency, not on its balance of trade. The balance of trade will have an influence, if you like, of some sort. But the overriding point is that if nobody has any faith in the currency, then it has no value. It's actually as simple as that. And the problem the Russians have is that in Western financial markets, which basically are the world's financial markets, there is absolutely no faith in the ruble at all, no faith in Russia. All the propaganda is against Russia, etc. And even if it was deemed, politically correct by a major player in America to acquire a position in rubles, which I can assure you it is not politically correct at all, they wouldn't do it. So, so basically, the situation, I think, is that if you drive up, which is what the Russians are doing in connection with the Saudis, if you drive up the price of oil, you will create a destabilizing position for the dollar. Now, that is, you don't need to be the brain of anywhere to work that one out. But if you destabilize the dollar, you're destabilizing the major fiat currency. And the destabilization factor for those which have very little credibility in Western currencies is going to be even greater. And if you look at the history of how a rising oil price has affected the relationship between the dollar and the ruble, every time the oil price rises, unless it really shoots up, and so of a very short period of time, but basically higher oil prices work against the ruble. So what you're likely to see, there's no doubt that they're driving oil prices up, and they're particularly driving up heating oil and diesel. Now, this has a major economic impact, obviously, in the Northern Hemisphere winter, one. And secondly, all logistics basically are diesel. Something like 95% of logistics are diesel powered, one way or the other. So the effect of diesel prices permeates the whole way through to everything that is delivered to our shops, to our doors, whatever. The consequence of that will obviously be pretty destabilizing for us. We will see our consumer price inflation rates rising and so on and so forth. And the way I've put it is that this will mean that, people living in Germany in this winter will shiver, because they won't afford the heating oil. But my God, if they're shivering in Germany, they'll be freezing in Siberia. I mean, they really will, because of this currency effect.
Right.
And I think this is a point which so few people really appreciate, that what Putin is going to have to do is to stabilize the currency. And this is why I think it is inevitable that his energy policy is going to lead to the ruble going on to a gold standard. And we've had people like Sergei Glaziev and so on, recommending this. And we know that he's got Putin's ear. And the other thing, of course, is that they have raised interest rates to try and protect the ruble. It steadied it, but for how long? As I've just suggested, not very long with rising oil prices. And it really means that 1 year money is something like 16%. So if you're trying to run a business, and you think, oh, I've got an idea to make this or do this or, set up whatever, but I need some capital in order to do it. I mean, the capital is prohibitively expensive in terms of nominal interest rates. If they go onto a gold standard, then that will decline towards around about 3%. I mean, that's the history of it. Assuming that the gold standard is, if you like, properly constructed and therefore believed in markets, understood in markets that this is a solid arrangement, then the right level for 1 year money is probably in the region of about 3%, 2 to 3%. The economic benefits of this would be immense. So, everything points to, the Russians, I think, moving in that direction. And the other thing is that, I mean, going back to what I was saying about the dollar and rising bond yields, bringing about a bear market, triggering portfolio liquidation, and tending towards a collapse of the dollar, the other aspect of this is that both Russia and China must protect themselves in those circumstances. So this could hurry the process quite rapidly. And it might indeed accelerate the decline of the dollar at that stage, because you've then got an escape route out of the fiat currency system, which is really what the dollar is all about.
Just before we go on to the next question, I noticed, I mean, we know we have a war in the Ukraine, and I don't blame anybody at the start of this. I mean, there's lots of economic reasons why it's happened. But what I did notice when Putin did enter Russia, into the Ukraine, probably for the first 3 months, the exchange rate between the US dollar and the ruble went down to about 64, 65 ruble, or US dollars by ruble, or the other way around, sorry. But now it's back up to 95. So what damage has that done to the Russian economy?
Well, it has damaged the Russian economy. And I think this is one reason why Putin has resorted to trying to drive up energy prices. I mean, it's not the only reason, because there are geopolitical reasons as well. He wants to drive a rift, if you like, between the NATO membership and America. And this is a very effective way of doing it. So there are a number of reasons for that. To refresh everybody's mind, the reason that the ruble suddenly went very, very strong in the wake of, literally the first couple of months of what they call the special military operation, is that firstly, the markets took fright at the whole thing, so sold down the ruble. So, and it's an upside down rate. So the higher number is a weak ruble, lower number is a strong ruble. And it shot up to about, I think, from 140, something like that at one stage, or 120, whatever. And then Putin responded to this by saying, well, if you want your oil, then you're going to have to pay in rubles. So suddenly everybody realized that there was going to be a scramble for rubles in order to buy oil, which everybody needed. So basically, that drove the ruble stronger to a level of around about 60 to the dollar. But since then, gradually, it's tended to decline again. Now, part of that decline was when the oil price itself started to decline, because the oil price fell from, I don't know, $130 or something down to, sort of, I think, a low of around about 69, 68, 67, something like that. Correct. And, since then, it has begun to rise. But this is the interesting thing. As the price of oil has begun to rise, the ruble has continued to fall. As to my point earlier about how even higher oil prices are not going to rescue the ruble. If anything, I think the ruble is likely to fall even further. So that, I think, explains, if you like, that sort of rather odd situation.
Right.
But I mean, since the cuts, Saudi Arabia and Russia just a couple of months back cut oil production by 1.3 million barrels a day between them, and that has really driven oil prices up to, and we're currently looking at over 90. I think we hit something like 93 this morning. So, and as I speak, it's 93. So this is this is putting a lot of pressure on the West. It really is. But you can see how other factors can drive the ruble-dollar relationship. I mean, it's not a simple case of strong oil, strong ruble.
No, but fair enough. Next question. Let's move forward. As we all know, central banks, and especially the ones in East Europe and China and the Asian areas, central banks have been buying gold in huge amounts, and yet at the same time, central banks are talking CBDCs. What is your opinion of why this is taking place, and what's going to be the outcome? So we're talking central banks buying gold by the tonnage, then they're talking CBDCs. CBDCs, to me, just wants to have control over the people. But what do you think the outcome's going to be?
Well, the central banks acquiring gold are mainly Asian or East European, some from elsewhere around the world. I mean, more in the sort of Russia-China camp, as it were. I mean, there are also some of the Central European countries like Poland and Croatia and so on. They've been adding to their gold position as well. Singapore is an interesting one. They really have ramped up their gold reserves, relative to their population. So that, I think, is one story. I think the CBD story is a completely different story. And that is being driven really, I think, by the Western banking cartels, central banking cartels, attempt to respond to the obvious problems that fiat currencies are beginning to face. They seem to think that, all they need to do is have greater control over how the currency is used in order to protect its value, or to be able to control its value, so that it declines at an average rate of 2% per year, which is the mandated target, which they might increase to 3% or even 4%. Anyway, that I think is the background to their thinking. They naturally seem to embrace the idea of greater and greater control to deal with the problem, rather than standing back and understanding that the problem is their attempts to control things, if you see what I mean. So, their denial of free markets. If they accepted free markets, then this wouldn't be a problem. But equally, there is a problem that in order to get from where we are in the West with this sort of control freakery back to thinking, okay, we've got to actually stop regulating, we've got to rescind regulations, we've got to balance our budgets, we've got to give freedom back to people in order that our economy can develop the taxes and all the rest of it, so that the state can operate alongside it as a safety net, whatever, but not interfere in the economy. I mean, to get back to that classic position is virtually impossible in the bureaucratic mind. It goes completely against what bureaucrats, even understand. It goes against the raison d'etre for their very existence. So they cannot think that way. And if you put on top of that the sort of Keynesian idea that, governments have a role in intervening in the economy to, stop recessions. It's been disproved time and time again that this actually works. But, they still insist on, well, the answer is we didn't do it hard enough, So you've got this attitude, and it's that attitude that's driving the CBDC thing, which is actually, in terms of the research and all the rest of it, is being centered in the Bank of Central Banks. Surprise, surprise, the Bank of International Settlements. And you have that, this guy Carstensen telling us how proud he is that this was going to give the central banks the means to control everything. The rest of us who are actually just ordinary people thinking, well, hold on a minute. This is not something I can, take away my freedom and all the rest of it. I mean, we know governments take away our freedom all the time, but this is just a step too far. And it's interesting that the Bank of England produced a paper on this, a white paper. And in that paper, it modified the CBDC thing insofar as it changed the model to one whereby these would be issued alongside sterling, but the Bank of England wouldn't operate bank accounts for individuals and businesses in the economy. That would be in the hands of the commercial banks. Now, this, I think, is actually one of the practical problems with the CBDC. For a central bank to get into the retail banking operation, which is essentially what the Bank of International Settlements line is, just think about the software development, the committees meeting time after time, the legislation, the whole. I mean, this is a project that would take years for a bureaucrat to actually put together. And by years, I mean, I don't mean just 2 years. I mean between 5 and 10 years. And I've said before that I think the reason that the commercial banks in America have kept quiet on this is that they needn't actually say anything. The idea that the Fed is actually going to do this, I think we can forget. I mean, there will be some people who run around saying, "Oh, the Fed's going to do this," but I would disregard that, because apart from anything else, if you're going to take away the raison d'etre for a commercial bank to exist, which is essentially the end point of the CBDC, then the banks in America aren't going to vote for it. And when I say they vote for it, effectively they do, because virtually every senator, congressman relies on banks for their campaign funds.
Good point.
Are these turkeys going to vote for Christmas? Is the way I put it before. I think the answer is no. I would I mean, I know people get very worried about this, but I would disregard. Really would disregard this. I don't think, apart from anything else, I mean, if they did, by some miracle, introduce it, I mean, history has shown that another fiat currency just accelerates the failure of the first. So, and it fails as well. So this is a complete nonsense, and it's based in a sort of groupthink driven ignorance. It really is.
Interesting. Yeah. I like the answer. Yeah. Absolutely. Moving forward, now the NYMEX, which is the New York Metals Exchange, is the biggest gold market at the moment. The Shanghai Gold Exchange is catching up. Will it take over? And if so, what will happen to the gold price? Now, I just recently listened to Pierre Lassonde, who's into the mining of gold, more so than buying of metal. But he said it will be a casino if the Shanghai Gold Exchange actually have a bigger market than the NYMEX. So what's your opinion? What's your thoughts?
Well, I respect what Pierre Lassonde says, but I would disagree with him on this. And I think let's just put this into context. The largest market in the world has been the London bullion market, which is roughly 8 to 10 times the size of COMEX. This is in the gold contract. So that is number one. But we're talking about number one of a paper market. Number two in the paper market is obviously COMEX. Okay, but that's regulated. And so that's the visible one, as it were. The Shanghai Gold Exchange is a physical exchange. There is also a futures exchange, which works off it. But the Shanghai Gold Exchange itself is a physical exchange. And not only that, but it's ring-fenced insofar as it represents the dealings of gold, which is locked into China, can't leave China legally, and basically doesn't leave China legally. There is an international exchange, and the idea that you can arbitrage between the international exchange and the domestic gold exchange, no, you can't, and that's why you've got two very, very different prices. So I think we need to look at the situation, if you like, in those contexts. It's sort of physical against paper. Already, the Shanghai Gold Exchange is the largest gold exchange, physical gold exchange in the world, but it's a domestic market, so it's not an international market. One of the problems, and you as good as gold will have sort of found this, is that you can see the headline price, which is actually the paper price, falling, and yet you've got no stock coming in. There's a shortage. You have to bid up to get, to get physical gold. There is a disconnect between the two, and I think that disconnect is likely to increase. As to if Pierre was saying something about how it's all going to become a casino thing, I mean, I would say that the casino already exists on COMEX. I don't think it's going to exist on the Shanghai Gold Exchange. But there is actually one thing that an awful lot of people missed, including me, and that is that back in the beginning of June, the Chinese government decided to stimulate demand for gold amongst the poorer people in China. And they did this by authorizing a new type of bank account where you could move your deposit actually into physical gold to be held by the bank. Now, this is something which is interesting, because it raises the question, why does China actually do this? I mean, they encouraged people to buy gold back in about 2010. They roped in the World Gold Council to advise them, and the result is that jewelry sales took off. And so far, there's over 20,000 tons. I keep on forgetting the figure, but it's something, 20,000 tons of gold is now recognized to have been delivered into private hands in China. They're now broadening that out. They're saying, if you're poor, you still need to put some money into gold. Now, this to me has got to be the result of the Chinese looking at the instability of the Western-driven financial system and thinking that the dollar could actually become very unstable. I mean, think about the BRICS thing, for example. Ahead of BRICS, it was quite clear that Russia was going to push for a new gold-backed trade settlement currency. That was their plan A, as it were. Plan B was they'd have to put themselves onto a gold standard. But that was, if you like, the Trojan horse, if you like, as far as the Russians were concerned. Now, the Chinese at that stage obviously sort of thought, well, if this goes through, this is going to be very, very bad for fiat currencies. And we would have to consider our position. So what do they do 2 months ahead of the Johannesburg meeting? Well, they tell everybody, look, you better get some gold. And I think that's what's happened there. So this, I think, to a large extent has been responsible for the premium that's arisen on the Shanghai Gold Exchange, whereby the gold price is trading at well over $2,000, while here we're under $19,000. So I think that's the relationship. And I think in time, if we see the price of gold shooting up through $2,000, which is not so much as I always try and make this point, it's not so much gold going up, it's dollars and Australian dollars and Indian rupees and euros and pounds going down. That's what's actually happening. So as they go down, and you see the gold reflecting this with priced in dollars at well over 2,000, then there is going to be, I think, a spreading crisis amongst the paper markets because they just haven't got it to deliver. And there have been various people who sort of can see the gold story. They can see the argument that we're getting out of the fiat currency standard and we're going back to, some sort of gold backing or whatever. How does America deal with this? Well, one suggestion, which has actually come from some, highly respected investment houses, is that over a weekend, the Americans could well declare that, as of Monday morning, there will be a backing, if you like, of some sort for the dollar at $10,000 an ounce. And I've even had it suggested that they will probably raid the ETFs in order to do this. Now, they can actually raid ETFs in America. So GLD is very, very exposed to this. And if you're a conspiracy theorist, you sort of think, well, hold on, this might fit in with JP Morgan becoming a custodian alongside HSBC, because before it's just HSBC. There's no reason on earth why the World Gold Council should sanction giving a custodial function in GLD to JP Morgan, particularly when they've been found guilty in the American courts of manipulating the market. So, what's going on there? So you can see how, you can sort of get 1 and 1 equals 3 all of a sudden in this story. I think that's extremely unlikely for various reasons. One of the main ones is that it would make suddenly China and Russia look incredibly rich, with all their gold reserves. It would. Now, okay, they're not declared gold reserves, but I can tell you that the spooks in Langley will have a pretty good idea that there's a lot of gold hidden in the Chinese state and also in the Russian state. I mean, these are not hard, firm secrets. So I think that the spooks will probably discourage this line of reasoning. And the other thing is, of course, it would bankrupt the paper markets completely. I mean, you would find that COMEX would have to go onto force majeure. And as far as the LBMA are concerned, they would have to do something. I don't know if there is something in the clauses that allows them to do that. But, I mean, this would be a complete crisis. It really would. And it wouldn't secure anything, because the whole reason for doing this is to try and buy time as you continue with your Keynesian policies. I mean, there would be no intention at all to modify economic policies in the way which would be required for a gold standard to be maintained. So I would dismiss that sort of idea.
Anyway, Alasdair, look, I thought one of the main takeaways from the BRICS summit meeting in Johannesburg was the confirmation of 6 new nations, the addition of 6 new nations. Now, I want to highlight who these are. And this will be as of the 1st of January, recognition. United Emirates, Iran, Saudi Arabia, Argentina, Ethiopia, Egypt. Now, what's interesting about this now is that the 3 largest oil producers in the world will now be part of that formation of BRICS. Now, I'd suggest that they're in a very, very powerful position, and surely spells the end of the petrodollar and US dominance at the same time. Your thoughts on that?
Yeah, no, you're absolutely right. And I'd add to it and say that from January the 1st, Russia becomes president of BRICS. So, watch that space. I think your point about these oil producing nations is absolutely right. And I can see BRICS being expanded. And I think that the next thing that is likely to happen, as well as it being expanded, is that I think it'll be folded into the Shanghai Cooperation Organization. Because amongst the attendees at the Johannesburg Jamboree were basically representatives of all the Shanghai Cooperation Organization members, associates, and dialogue partners. So it looks to me like that's what's happening. as to the petrodollar, I mean, I think to sort of clarify, instead of the Saudis insisting that payment is always going to be in dollars,
Yep.
what they're now saying is we'll accept payment in anything which we're prepared to accept as value. And so this means that politically, effectively, they've kicked America out of the Middle East.
Correct.
And I think the most tangible sign of this is that peace has returned to the region. I mean, diplomatic relations are restored between Iran and Saudi Arabia, something that was completely inconceivable 6 months ago, maybe a year ago. The Houthi problem in the Yemen is now being resolved. President Assad of Syria is, they're now talking to him again. And indeed, the whole thing is thawed out. And Assad has been off to meet President Xi. And there will be a lot of Chinese investment in Syria, rebuilding it and all the rest of it. Basically, the Americans and NATO are just being kicked out of there. I mean, fine. We're trying to sell them some Typhoon jets, Saudis some Typhoon jets. Would you believe the German Greens are stopping us from doing it? I mean, don't ask.
Yeah.
I mean, that comes about because Germany is one of the contributing partners in the Typhoon project. So, you have to have unanimous. Anyway, the world actually has changed in this very, very important respect. And I think I've said on one of your podcasts before that, the signal that we gave the Middle East that we're turning our back on fossil fuels, has had completely predictable consequences. If the West isn't going to buy our oil, we better start talking to China and Russia. They knew that a long time ago, in fact. So this is a process which I think has been underway. But the problem with replacing the dollar is that at the moment you're accepting currencies which, in most cases, are relatively weak compared with the dollar.
Mm-hmm.
And, particularly, Russia has a problem with being paid in rupees because the way the international currency system works is they have to sell the rupees for dollars and then sell the dollars for rubles if they want to put it into rubles. And they can't buy the dollars by selling the rupees. They can do a workaround with China to an extent, but at the moment, I mean, to get paid in rupees is completely worthless. It's as worthless as having dollars to the Russians. So that is a situation which has to be resolved. And I think it probably will be resolved. And I think that's sort of drawing together the BRICS and Shanghai cooperation organizations into one sort of huge, great mega block will make it considerably more difficult for the West to counter this in terms of political power, hegemony, if you like. Once it's secured that way, then I think, the longer term plan will certainly be to reintroduce gold backing into currencies which are acceptable to the energy exporters in payment for energy. So it's all going that way. And I think this is going to undermine the dollar, I think, really quite rapidly as people begin to understand this. And that's apart from the weight of foreign ownership of dollars argument, which we were discussing earlier.
Yeah, I mean, the US have had complete control, complete dominance since 1973, haven't they?
With
pretty much due to the petrodollar. Yeah.
I've always said power corrupts and absolute power corrupts absolutely.
Yeah.
Yeah.
Okay, we've reached a point in the evening again where we've just about reached our limit. But what I've really got to say here, and we continue to remind everybody of a gentleman by the name of Charlie Tremendous Jones, who always used to say, in 10 years' time, you'll be in exactly the same position you're in right now, apart from two things: people you meet and the books you read. Tonight, everybody's had the opportunity of gaining really powerful information from Alasdair Macleod. I mean, what an opportunity to take advantage of. And, my recommendation to everybody that's viewing this discussion, this interview, takes advantage of the knowledge that Alasdair has, and just search for him if you haven't already, and just listen intently to what Alasdair has to say, because it's powerful information and it's going to take you to the next level if you use it effectively. So I'd like to thank you again, Alasdair, for your wonderful contribution and your support for As Good as Gold Australia in this channel. Very much appreciated, always.
That's very much my pleasure, Darryl.
If we can just close by making reference to just a couple of other people that have helped us along the way, Brian. Peter Daniels, of course, always used to say, and would still say it today, I do not care what poorly executed economic decisions are made in the world tonight, because tomorrow I'll still be able to party. Why would he be able to do that? Because he's been saving in real money all of his life. And he was responsible for Brian and myself understanding exactly that. He's transferred that information on to his children, and his children have passed it on to their children. So they are establishing generational wealth, which is what we all should be doing in real terms. Because after I'm gone and you're gone, Brian, well, we'd want to make sure that our children are in the best possible financial position they could be in. And that's exactly where they're going to be placed with gold.
Yeah, well, one of the biggest books in the world says put 10% away. It doesn't matter what you earn, put 10% away. But they're talking about put 10% away in gold or silver, not in any type of other currency.
Yes. Yeah. Well, Ray Dalio, what's Ray Dalio?
Ray Dalio, I mean, he's a very good economist or investor, but he said, if you do not own gold, you have no understanding of history or economics. And here's a gentleman who's worth $20 billion, and he puts 10% into gold. That's $2 billion. That's a fair chunk. A fair chunk.
And he gone growers.
Right. Everybody asks us, how much should you put into gold and silver? And you can have little arguments left, right, and centre, but there's one straight one that Darryl and I that we both agree upon. How much should you own? Whatever you cannot afford to lose. As you get older, you can't afford to lose too much at all. So
because you've got less time to make it up.
You haven't got any time to make it up.
Exactly.
Exactly.
And I don't know how our viewing audience is looking at us right now, but I can't afford to lose anything. I mean, absolutely. I want to make every post a winning post.
Yeah.
Jim Sinclair, if we could finish with Jim Sinclair's comment, just become your own central bank, makes enormous sense. He's not a great admirer of the central banking system, but they own gold, and we know why they own gold, because without it, their currency in real terms is valueless. So it's control, it gives you influence, it gives you power. You need to own gold. So once again, Alasdair, really appreciate your support. Thank you so much. And until next time, and I'd like to thank our viewing audience, as is always the case, for supporting this channel as well as they do. So until next time, stay well, stay focused, and goodbye for now.
And goodbye for now.